You're watching Fox 5 News.
Stocks on Wall Street closed lower today. This comes after the Federal Reserve left interest rates unchanged. At the end of trading today, the S&P 500 was down 5 points. The Dow, which had gone up as much as 190, ended up down 65 points. And today's decision to leave interest rates unchanged had a lot of people's attention from Wall Street to Main Street. And here to talk about that decision and when we could actually see a rate hike is financial advisor Laurie Itkin. Laurie, good to see you as always.
Good to be here, Andrew.
All right, tell us about this decision, if you think it was the right one.
Well, I don't think it was the right one, but it really was a day for some winners and some losers. The people who won today are the people who are borrowers, the people who are in debt or who will be taking out debt. And the people who lost today were the people who are savers and conservative investors. And let me explain what I mean. For those people who are looking to refinance a mortgage, they still now have some time to do it while interest rates are low. But for the people for the past 7-8 years who have been trying to save money in a conservative way, they are going to continue to get paid not even 0.5% on their money in a bank account or a certificate of deposit. So again, if you're a borrower, it's good for you. If you're a saver, it's not.
When it comes to how this decision was made, what kind of led to it? Because I know there's a lot of factors to consider, but now here we are many years after the recession and still the interest rates remain exactly where they've been for quite some time. Well,
there were two main variables that influenced the decision. The first is unemployment, and again, it's coincidental, of course, but as you just said earlier, we know the San Diego economy is going to see 1,300 more people unemployed due to the Qualcomm layoffs. And that is one of the issues, unemployment, that Chairwoman Janet Yellen mentioned today. Although unemployment, the levels have been improving, she still says that there's a lot of slack in the economy. There are a lot of people who want full-time work and only are working part-time, and there are a lot of people who have had to leave the workforce, start their own businesses because there aren't enough jobs. The other issue, she said, is that inflation is not reaching the 2% target. This sounds a little arcane, but what it means is that the Fed, they want about a 2% inflation rate, and what they're finding is because oil prices and other things are going down in price, that provides a downward pressure on wages. So if you're hoping to go to your boss and get a raise, you may not be getting one this year.
Talk to me, Laurie, about how the interest rate is kind of used as a tool when it comes to the economy. So for people who don't quite understand what's going on here with this interest rate change, a little bit how much it might go up or how it might stay the same, how is it used as a tool for our economy?
Yeah, I mean, that's a great thing to ask, because what they did is when we had the recession 7-8 years ago, the Fed reduced interest rates to near zero. The whole philosophy about that is that if interest rates are low, borrowing costs go down. So I can borrow money as a business at a really cheap rate, borrow money, and then produce more things, hire more employees. My concern that they didn't raise it is that we have seen things improved over the past decade. And if they keep interest rates at rock bottom, if there is another recession, another downfall in the economy, they have lost a very important tool to use. Now, having said that, economies all over the world now are actually showing stimulus. They're reducing their interest rates too, and there have been times when other countries have tried to raise interest rates and have had to lower them because the economy wasn't strong enough. But the message we got today is that the economy is not strong enough to accommodate this, and that they are concerned that the global economy can be putting downward pressure on the U.S. economy.
Well, they did not make the decision today, the Fed that is, as far as raising the interest rates now, but many people still feel like they may do it by the end of the year. Laurie, thank you very much for your insight as always. We appreciate it.
Thank you, Andrew.